All right, traders, welcome to today's end of day video. This is Christian from Hertz Tribeca Trade Group, and it is Friday, December 13th. So the end of a fun-filled, event-driven week concludes. Well, I don't know if you would call it fun-filled, but I think just looking back at this week's events, Fed meeting, UK election, sorry, not European election. We had ECB, we had trade rumors, I guess some type of trade deal done. So that was the big, I think the big headline for the week. Even though I think we had something almost every day this week, and a lot of earnings reports too. So one of the first things that I wanted to say when we get through a week like this, which I think, by the way, and I'll get to in a second. I think that overall, most of the week's events ended pretty well. I think we got through this week with a lot of positive developments. But the first thing that I wanted to say is when we have an event-filled week like we had, it's really not easy. I think that basically give yourself a pat on the back for staying the course and not getting spooked out of this market too much, because really, and it's difficult in a week like this where one of my things that I always try to do is watch price, watch the internals in the market to kind of tell you if there's some type of direction or a change that's going on. But it gets always very noisy when you've got stuff like this that can really kind of change the direction of the market, such as an FOMC meeting or something that's going on with the trade war. So give yourself a pat on the back for dealing with a huge week of events. And normally when I get to the end of the week like this, I'm pretty tired, because it's just it's a lot of information to come at you all in a short amount of time, and then also, like I said, staying the course, unless something really changes. A couple of messages that I had this week was, control the things that you can control, right? We can't control the outcome of the trade stuff, what Powell was going to say this week, and something else, earnings related or stock specific. Control what you can control, which is your risk, right, and how you're positioning. So I think we did a really good job, throughout the week. Members helping and contributing this week. So just very proud of how things turned out, and basically how we managed the week. So, I think that was the right thing to do. I was basically selling into strength. I think this week we'll talk a little bit about the trade. By the way, risk disclaimers up. Everything that we're talking about is for information purposes only. I'm not giving out any recommendations or anything like that. But to talk a little bit more about, the trade stuff, because I think it's not only headline notable, but I think it's just notable how you're interpreting the information as a trader, right? And someone who's either a trader or an investor, or maybe a little bit of both. But I think, right, I don't really care about what the specifics of the trade deal, for trading purposes, right? Soybeans, how many soybeans are going to be bought? The really nitty gritty specifics, how many phases it's going to be. What I care about is the uncertainty, and whether or not they're dialing up the rhetoric or they're dialing it down. Now, I think it really got dialed down quite a bit this week, and I think it really kind of helps the overall markets as to for what we got this week. Number one, with the tariffs being delayed, that was a big thing. And I think as the week went on, it felt like, looking at some of the sectors that were really outperforming this week, the market always seems to know, right? I mean, sectors going, the semiconductor is going absolutely berserk this week, right? And that's a pretty trade sensitive area. Kind of gave you a hint that they were leaning that way. So if you pay attention, right, to what is happening with price, because again, price just always seems to be leading. We got the cue, basically that they were going to make nicey nice. So they took away the December 15 tariffs, and they're working on some type of phase to get out of the ones that are existing. And I think that's why, initially we had some false reports that the existing tariffs were going to be rolled back, and then it became a little bit of a sell the news event today because we didn't get everything, all those rumors that were swirling around yesterday. Not all of them came true. From the positive and the negative side, but I think that's probably why the market had that momentum to it several times yesterday, and yeah, I mean, sometimes the market gets a little bit ahead of itself. So I think that's really what we got today was a little bit of that sell the news. Things were getting a little bit too far, expecting like, oh geez, they're going to roll back all the tariffs. Well, that didn't happen, and I think that's why you just saw a little bit of digestion going on, and also a little bit of profit taking. Remember all those big trades that we saw earlier in the week. A lot of big sorry, but semiconductors keep coming to mind because we really saw some outside and repetitive call activity in that group. But they're going to take profits in those things. Those things that ran up like 4%, 5% in some areas yesterday, and a few other trade sensitive groups as well. A lot of materials, like FCX ran up a lot as well. I mean, profit taking is absolutely natural and part of the cycle that we're in on a weekly basis. All right, so for today's performance, that's kind of just my thoughts about this week and getting through a big week of events. Next week we have quad witching, right? So that's going to affect some things as the week goes on. Remember, most of those events take place on Friday. There's also the index rebalance for the S&P, right? I'm not talking about like the one-off name that's being added and one name being deleted. The whole index shifts, right? They do this quarterly rebalancing where they change around the members, where they basically just put them back to benchmark weights. Remember, they only adjust that philosophy once a quarter, and then what happens between now and March, which will be the next index rebalance, is the variable that changes is price. So some names outperform others, some names underperform others, and as long as those names stay in the index, they have to be kind of footed back to foot back to where the benchmark tells them that they should be. So that happens for all the S&P indices and all the NASDAQ indices, and specifically like all the sector ones too. So like your equal weight indices like XRT, XBI, I think ITB is also equally weighted. All of those get foot back to equally weighted, right? Because they'll drift. What happens is they drift over the quarter based on who's outperforming one another. Anyway, so that's for next week. We'll talk more about that next week. Thought for next week: do your homework and you will find trades, right? I think a lot of people a lot of traders have the tendency to be like, hey, we're running up. This doesn't seem normal that we're moving up like this. It seems like we're getting overbought. Basically, watch the tape for confirmation. I've been saying this. These are fun times when the market breaks out like this. Because let's face it, we're breaking out, and that is exciting, and you could earn outsized profits than something like when we were going range bound. So number one, breaking out is a great thing. Number two, the analysis gets a little bit easier, right? Because you don't have to worry about overhead resistance. We don't have any overhead resistance right now. We did for a couple days back in here, right, when we moved back in here, but we don't have any overhead resistance. So it just becomes a little bit easier to analyze when we don't have that in front of us, right? We don't have to worry about things like what I refer to a lot of times in charts, virgin point of controls, right? We don't have virgin point of controls because we don't have any record of any price up here, right? So again, it becomes easier. The one thing that I'm always cognizant of is when we get overbought. We're not we're a little bit overbought, but we're not super overbought. The RSI right now on the S&P futures, if you look to the bottom left of your screen, if I move the mouse there, it will mess up the number. But it's a 66 right now. So anything technically above 70 is overbought. So we're not exactly there. And, for us to be around overbought but not get super overbought is also a great place to be. Remember what happened back here. So I will move my mouse down here. We got to a 75 RSI and we cooled off, right? So we're almost there again. But we just took out, and we basically did it with one big day, but we took out that resistance in one big day. So we're processing this new leg higher. So what this tells me is, so what's the conclusion here? How do you trade this market? You basically, I think, right, is continue to stay with the trend. As always, watch for divergences, right? Those are warning signals, right? So the internals of the market, when they start to turn and the market is still breaking out, though that's known as a divergence. And right now we're not really seeing. I mean, today was a little bit of divergence with the market making, just barely a new high, and breadth was negative for the day. But I think that you have to just kind of take it realize one day is not a trend. And I think it's kind of natural to, after the monster day that we had yesterday and the events of today, how it unfolded, that you see profit taking. So I'll give, if I happen to see it again next week, that would be more of a warning sign. But I don't really see that right this second. So some of the things that we did this week, right? Took a lot of profits in swing trades. And again, because obviously more things are known, but we didn't know completely how things were going to turn out this week. So again, staying out of some areas that saw profit taking today, I think that's helpful, right? You want to be able to rest a little bit with your positions, after a big move. So my thought is, after taking a lot of profits in swing trades, I think that we have and this is what I sent out on the private Twitter feed earlier, that I think that we have a chance to kind of continue to grind higher, but I don't want to get over the tips of my skis with positioning, right? So I mentioned yesterday, like I have more cash available than I've had in previous weeks. But that doesn't mean, I don't want to have anything on the books in terms of trades. And I threw on like an SPX call spread for next week for the beta, what I call the beta move, right? Again, it's difficult to figure out what groups are always going to outperform others. So if you just basically put on a long S&P call spread, which I did this week and it worked really well as the NDX call spread that I put on as well in the trading room, both of those trades worked really well. And that's kind of how I want to play this market. Have some exposure that's a little bit leveraged. So I paid, what did I pay for that call spread? Like right around 340, I think, for next week's 3185, 3195 call spread. So this way, if the market continues to grind, I have some exposure, right? And it's levered. If the market now, if we open up down, and if we do have either a couple flat days or a couple down days, I think buyers will come into this market, right? I just think that that's the environment that we're in. Notice as well. Sorry, let me just grab some water. That not every day is going to have momentum to it. So you kind of have to be able to sit in some positions as well as have that cash on hand, because it's tough to kind of sit in an option position and have it decay a couple days. So that's why I started a position in the SPX call spread, and if we happen to get chop or a down day on Monday, then I'll add to it. So that's basically the plan for next week. All right, let's go through. I also want to do a quick week performance review. Excuse me, jeez. I have been getting into coughing fits all week long. So performance for the week, I just wanted to recap this for you. As all of these actually ended up for the week. So it's kind of rare when we have equities, bonds, international areas, and gold all finished up for the week. And actually the SPX underperformed most of these. The diamonds, and I think maybe that had something to do with Boeing. I think there was another name in the Dow that I'm forgetting that also went down this week. Small caps actually underperformed a little bit this week. Where we really saw outside performance was in international areas. which I'm long this group, and bonds did okay. I thought it was also kind of interesting. The volatility of the bonds versus equities was much bigger this week. By the way, Amarin got approval for this. I don't know if they're going to unhalt this name, but that'll be interesting. Because I think if you have options that expire today, you've got 5 more minutes before you can expire them. So it doesn't look like they're going to, at least I don't see anything that's saying that they're going to unhalt the name, but before 5. But in any event, take a look at the performance. Take a look at the move, the percentage move in bonds every day this week. Now again, like bonds for are still, I think, going sideways. They had a lot of volatility every day this week, right? So look at the TLT, up 1.1% today, down 1.6%. And then Wednesday, they were also up 80 basis points. So look at the comparison with that between equities. We had, of course, a big day on Thursday, but nothing crazy the rest of the week. So bonds were actually moving, had more intraday volatility than the overall, the big market index, the S&P. So I just thought that was notable. And again, I think it always pays to pay attention to what is really moving and has momentum to it. So looking at the sector performance. By the way, gold was also up 1% this week. But the semiconductors were up huge, up 4%. And again, I think that's indicative of risk on. The solar names rebounded this week. They've had some trouble. I've been long some SEDG, which started to come back to life today and basically popped out of here. So again, another one that you had to be patient in. But the solar ETF doesn't look bad. There's another VPOC up there. So some groups quietly made some moves this week. Oil and gas names were hot in the beginning, and yesterday, I think they were one of the underperformers today. XOP was down 2%. OIH was also down 1% today. So even though they were both down today, they still had nice weeks. The banks were strong earlier on, very impressive. This JP Morgan, Berkshire, which is a name that I've been long for a while, in the tactical portfolio, broke out yesterday to new highs. Metals and mining, tech, a little bit of everything. Steel. What didn't perform this week? Defense and aerospace. Again, I think that has a little bit to do with Boeing. Also, REITs got smoked this week. Interesting what happened in that group. Down 2.6%. That's your IYR. Basically everything else. Home builders underperformed a little bit as well. I was looking for a breakout in this group. Haven't gotten it yet. FANG stocks underperformed this week. I thought that's been interesting all year long. I think FANG stocks, so much attention on them from retail, and they just haven't been where it's been at this year. Right, so again, it's good to learn from these. Like if you've been, there's nothing wrong with keeping an eye on FANG stocks, but if you kind of got caught in that, it's a lesson to learn that the market leaders won't always stay the market leaders. Right, there's different leadership, and that changed hands several times. What I like to refer to as a rolling bull market. But the FANG stocks, while they did, the internet stocks are still up for the year, but they're not up as much as the S&P. They underperformed for the year. I had a big argument with somebody on Twitter months and months ago. This person's not on Twitter anymore. Not from my doing. But they kept on saying over and over and over that the market leaders are the FANG stocks. And I try to prove it to this person, and they could not fathom that they were not. So I just left it at that. Sometimes you have to leave Twitter fights as Twitter fights or conversations and just agree to disagree. But I think I won that one, even though they kept on saying that FANG stocks have to go higher for this market to go higher, which was complete BS. Anyway, I'll move on from that. If you look down here, the real outperformers for the week were international. Look at Mexico, South Korea. Now, a lot of this is the dollar got weaker this week. Remember, with all these international ETFs, unless they specifically say they're going to hedge the currency, um, they're basically short the dollar, right? And they're long the local currency. So the dollar going down this week was basically unched today, but you could see for the week the dollar went down, and a lot of that was due to the FOMC. But you could see the performance was pretty impressive. Oh, where's my sheet? There we go. Things like Greece were in here. The UK was up 3.7%. That was on the back of the election. But you could see a lot of things. A couple charts that I sent out earlier this week. MCHI. I sent this chart out twice this week. China, definitely woke up. Broke out of this for a couple days. Emerging markets, also strong today. Look at the volume the last couple days. Things like copper miners, of course, FCX is the biggest weight. Notice this took out a VPOC, but look at the volume in this the last 3 days, tapering off after this. So some upside targets were hit in this, right? And then underperformers, again, there wasn't a lot. The worst performing country on my watch list, and I think I've got about 40 or 50 different countries that I've got on my watch list, was only down 1%. So again, really strong breath coming out of international areas this week, which is exciting. All right, and then option activity for today was pretty quiet. Right, we've got option activity up here. A couple of the semis saw more call buying. Xilinx, Taiwan Semi again. PayPal, I thought this was interesting. Just when you thought this group was kind of falling asleep a little bit, look at this pattern. Let me zoom out. Looks like an inverted head and shoulders to me, maybe a little bit abstract, but you got your head, kind of right shoulder, left shoulder, and neckline. And that would be awesome if this name gets going. I think also MasterCard and Visa popped out to highs. Almost for Visa, a lot of consolidation there in Visa, and had a big day today at 1.4%. So again, the plan for this weekend and for next week, what I do for members is I put together a watch list of names. Here's the other thing that's been funny about this market is every weekend I get to, after we've had, several weeks up, I've said, oh, geez, I'm not going to be able to find any setups for next week. I wouldn't be surprised if, I'm just not going to find anything that's not looking good. Last week, I had 22 names, I think, that I sent out to members. Now, again, the goal is not to give you, or if you're a member and listening to this, is not to give you like 100 symbols, right? Or even 20 is a lot. The goal is to kind of go through all my scans, which I look at all the S&P names. I look at names that are making recent highs, and then I've got my own personal scanners that I run through. And I'm just narrowing down names, right? So I get to 22 names, and then out of those, which is what I was last week, and then I narrow it down to my 4 or 5 best names. And I also set alerts on some of those other names because we really don't know, right? No one has a crystal ball and knows what names are going to show the momentum to them. So out of those best setups, I filter them down, and we go from there. And by doing that exercise, right, you get ready for the trading week. You kind of have a plan for the week. And some of those names I may enter right away. Some I may look at through the course of the week. But a lot of times what I notice is I will find names before they get any option activity. Right? So sometimes if you go through and you listen to my weekend video and the watch list, and he's like, hey, he's talking about Shopify, or he's talking about like TTD we traded today. You'll find those names, or you'll know those names, and then when you see the option activity, you know that there's momentum in the name, right? So you're like, hey, I've done my research, and this way I've got a plan together. That gets you so far ahead of the curve, rather than waiting for option activity and say I'm going to jump into the name after it's up 2% on the day, which is half of what we see, right? So having that plan ahead of time, that's my goal, is to get into the trade before we see the option activity. right? Because again, half of what we see on the tape is just momentum. They're just buying momentum, and they see something that's moving and it's breaking out of a range and they're attacking, right? So if I can get those opportunities, we're so far ahead of the game versus trying to just follow a name, like trying to chase a name that just saw, a big call buyer. So much better to plan ahead. Now, again, not every option trade is like that. We caught a few ones. The applied materials, that was a big block of calls that hit a week ago, and there was no momentum in the name. So it's all different varieties of trades that we see. But if you could get into a couple of those names before the momentum call buying happens, you'll get so much more. You're so much more ahead of the game, in my opinion. So that's what we'll look to do this weekend. Again, I'll go through all my screeners and let the trades come to you rather than forcing trades. All right, guys, have a great weekend. A pleasure to do these videos, especially after a really nice, rewarding week this week. Relax, maybe get some exercise, maybe have some good wine, beer, maybe a good scotch tonight, and take it easy, and then get ready for the week ahead. Thanks, everybody.